All right, hello everybody, and welcome to the Real Estate Play-by-Play.
We are your host, Christy Martinelli. We don't do that because
it's already recorded.
Well, you looked at me and I'm ready to do. I thought you were starting.
Passing it off. I don't know what else to say. Okay, today we're talking about.
Okay.
We don't need to say episode number or anything like that.
No, because we don't even know them anyways.
Yeah.
Okay. Try it again.
Okay.
You can pass it off. I'll think of something.
Okay. 3, 2, 1. Good afternoon, everybody. Welcome to the Real Estate Play-by-Play. Today we have an amazing episode. We are talking about one of my favorite subjects, the topic of renting versus owning.
Yeah, and this is actually a really popular topic. I mean, people come to us a lot and say, hey, listen, we're renting right now and we want to know, should we buy? What would it take to buy? What are the pros and cons of buying versus renting? And so we're going to tackle that today.
Yeah, and it's a big topic. There is so many considerations that go into things. There's definitely benefits to both owning and renting, right? Mm-hmm. But, personally, my feeling is that from a long-term standpoint, owning is just where it's at.
100%. I mean, you're literally, when you're renting, you're giving your money away.
You're paying a mortgage. It's just not your own.
Exactly.
And so there's pluses and minuses, right? From a renting side, I mean, let's talk about the positives of renting first, right?
Sure.
Just get those out on the table. The positives of renting is you just write your monthly check. And that's about all you have for responsibility. You don't really have to worry about anything else.
No, you want to take a trip? Yeah, exactly. Something happens, you want to take a trip, go ahead. You don't have to worry about the place.
Totally. Yeah. It's not your property to deal with. On the negative side of things, you don't really have control over your own property. If you want to paint your room hot pink, that's not an option unless your landlord agrees. If you want to get a dog, it's not an option unless your landlord agrees.
Oh my gosh, Danielle could never live like that.
I have several dogs, so it's not an option for me to rent at all.
And actually, not just animals, people. How many people you have in your house, and who you have. I mean, that's all taken into consideration when you're renting.
Right. And just, just having full control of the property, even down to little decisions like how you landscape things and all of those things are considerations when you're talking about like the logistics of renting versus owning.
Right.
But from a numbers standpoint, this is where I really think that it becomes a serious conversation, right? Mm-hmm. In our market, we're in the Northern California market. Honestly, renting is sometimes a little bit less expensive on a monthly basis. So if you're looking at it strictly from what are you putting out each month, renting might initially sound a little bit more attractive. But I think what people need to consider is the other aspects of the financial equation.
Correct.
So things like tax benefits. As a renter, you don't have the tax benefits. As an owner in California, well, nationally, you can write off your mortgage interest up to a certain limit. You can write off your property taxes up to a certain limit. And then when you go to sell the property, you can write off things that you've done to the property, repairs and improvements and things like that. And so those have huge tax benefits too.
Yeah, absolutely. And then obviously the other big one is the equity that you get in your house and being able to, possibly draw upon that equity. And the great thing about where we live in Northern California is you can literally purchase a property and not do anything to it and get equity in your house.
Yeah. So all of the experts agree. Mm-hmm. Now, obviously, a couple of years ago, we experienced some really abnormal appreciation rates, right? Properties were going up 10, 20% in a year. That was a little crazy. That's not normal. A normal appreciation market for Northern California, you're looking at anywhere from, 3 to 9% on average appreciation per year.
Which you're not going to get that in the bank.
No. No, you're not going to get that in the bank. We won't even talk about the banking conversation, but you're not going to get those rates in the bank. And so when you start looking at it as an investment into your future and wealth building, I mean, there are actual studies that prove and document that people who buy homes accumulate long-term wealth faster than people who don't.
Absolutely.
100%. So, I like to kind of tell my own story, right? My husband and I, we both had first marriages before. And so we had to start over, and we had to start over right after the real estate crash. And we kind of lost everything. And in 2013, we were faced with the decision of wanting to combine our households. We each had 2 kids, putting 4 kids under one roof is a lot. Finding a house big enough for 4 kids, as you know,
is a lot.
is a lot. And when we started looking at renting a property, realistically, it was going to be tough. And we also had a dog.
I was gonna say, did you have animals?
I did have a dog and 2 cats.
That makes it harder to rent properties.
Harder to rent.
Don't want to rent properties to animal owners. Necessarily.
Right.
And lots of kids.
Yes.
And that's just simple wear and tear on properties, right?
Totally.
So it's nothing. Yeah.
And so finding a house big enough was tough. And the amount of rent that we would have paid, we actually went through our own exercise that we go through with clients of preparing a rent versus own illustration. Because initially our first thought was, there's no way we can afford to buy. Right? I mean, this was many years ago. And, we were first starting off. And it was tough. And we really did the math of what are we going to save in taxes by owning a house. And we decided that we could push ourselves a little bit. So we bought our first house. It was, it was a while ago, but it was around $500,000. We had to borrow money from a retirement account to go at an FHA 3.5% down mortgage. So it was about, let's round it off. Call it a $20,000 investment. Okay. So we bought that property, 2013. We put $20,000 investment into it. So fast forward many years, suddenly the mortgage payment felt comfortable. You're saving towards your future. It was fine. It was definitely better than renting. We were able to, do all the improvements that we wanted to do. But, around 2017 came a time that we wanted to buy a second home. And guess what that first property did for us? That first property gave us the down payment for the second home. We were able to tap into that equity. We were able to buy our next house and leverage, right? Absolutely. So now we're taking equity that accumulated for free. We didn't do anything for that. And the house continued to grow. And now we became homeowners of 2 properties.
And so the first house that you guys acquired, you turned it into a rental.
That was a later down the road. So we took the first house, we bought the vacation property that we turned into like an Airbnb, which had income streams to it. Right. So we leveraged. Now we have 2 properties growing in equity. Then we decided to buy the third property. Same thing. We're able to borrow from the equity of the other 2 to put a down payment on the third house and convert the first one into a rental. So now all of a sudden we have 3 homes in the Northern California market that are appreciating off of an initial $20,000 investment that we took from a retirement account. How cool is that?
Yeah, and it's the perfect example of, making your money work for you.
100%.
And I think the reason, if you look at, and I know we have a few rental properties, and when they come due, our tenants leave, and then we have people apply. I always question, why are people renting? Why are they renting? Why are they choosing to rent versus buy? Right. And I think if you look at the reasons as to why they're renting, there are issues that as a mortgage broker and a realtor, we can tackle. Yeah. So for example, a reason why somebody might be renting versus buying is because they feel like they don't have the down payment, right? You need money. You need 20% down to buy.
Right. That's such an old school of thought. Yeah. I mean, it's really crazy. And I get clients a lot who, are maybe getting advice from their parents or grandparents and, you don't want to pay mortgage insurance. Okay, well, we can explore that. We can show you the math, but the cost of waiting is usually worse than not waiting. And if you really do the numbers, even if you end up in mortgage insurance, it's really not a big deal.
And also people, nowadays, a lot of times they'll just build into the rate too, right?
Yeah, 100%. So there's definitely options to get out of the mortgage insurance. We also have lots of programs that don't require, anywhere close to a 20% down payment. And there are some really cool options that are really recent, like within the last 30 days. There's actually a CalHFA program that is a shared equity program. Now, there are some income restrictions on this program, but it's a program that if you meet the income restrictions, the lender, the CalHFA program, will invest in the property with you.
So that's pretty cool.
It's amazing.
And so is this just for first-time home buyers?
It's for first-time home buyers that meet the income requirements, but the income requirements can be lenient. Like in some areas, the income requirements are up to $211,000 per year. So it's not a super restrictive low income program. Depends on each county, has different limits, but they will give you a 20% down payment and they will become a 20% owner in the property with you. So let's say in 5 years, the property makes $100,000 in appreciation.
Right.
They will get their 20% back,
Right.
plus $20,000, right? They're sharing in the appreciation of the property. You know what this tells me?
Tells you that California obviously feels that properties and real estates are continuing to go up, and they know that in the future it's going to only continue to go up. It's a good investment. It's a good investment for them.
Why would any agency want to invest in millions of homes unless they feel confident that the market is going to continue to grow? They're counting on that 20% equity. It's an amazing deal.
And there's other programs like that could help out, like we've talked about with FHA.
Yep.
And how much money you have to put down.
Yeah.
So if you don't have a chunk of change or that 20% and you're worried about that, don't let that stop you as a renter.
Right.
And I think something else that comes up quite frequently is, well, I have the down payment, but my credit's not that great.
Yeah. And that's a big one, right? Yeah. People think that they have to wait until everything's perfect before they buy a house. And that's just not the case.
No, and it's like if you're going into a game that you're going to play this weekend, people get hurt. You know, there's issues that arise, and you got to make do with the players that you have and go for the win. I mean, it's kind of similar. It's the same situation. Like, make do with what you have, and let's get you that house to purchase, because there's different ways to get you that win. There's different ways to get you that house, and it's our job as your mortgage broker and your realtor to get creative to help you out.
Yeah. I like to think of myself as a detective sometimes, because I really dig in to uncover potential options. And if we don't have any potential options today, we can almost always outline a plan that will get you there in short time.
Right. So, for example, with the credit situation, and there are, different ideas of where your credit should be. And there are different programs if you have lower credit.
Yeah.
But let's say your credit's really low and there's no programs to fit your credit. Well, your mortgage broker can guide you on how to build up your credit. There are little things that you can do to build up your credit. I just learned actually earlier this week that paying off your medical bills helps your credit jump a lot, but people don't know that.
It certainly can, yeah. And what's cool is I have software. So a lot of times people want to try to fix their credit on their own, and then they make errors that they don't realize, could be a problem, right? So let's use that same collection scenario. Let's say somebody has $1,000 collection and it's 5 years old. Okay. If somebody goes and pays off that collection today, thinking like, well, I should pay off my debts to help my credit score, that can actually hurt their credit score.
Oh, that's interesting.
It will show up as recent activity on a delinquent account. And that could hurt. But because it's 5 years old, it really probably isn't affecting things all that much anyhow. And so I have tools and software that I can use to simulate credit changes. So we can literally go in there and plug in and say, okay, if we did make this change, if we pay off this account by this much, how much is it going to affect things? And we can come up with a simulated credit, score based on potential changes.
I mean, that's super interesting, and it's really helpful.
Cool. It's kind of fun.
I actually don't think a lot of buyers know about that.
Yeah. I mean, well, a lot of mortgage brokers don't do it. There's costs to it on the mortgage broker side. And so I feel like some mortgage brokers stay away from that. But, we do have those tools. When it gets to be a credit challenge that's just, over my capabilities, I also work with amazing credit specialists. One of the things that we do just as a mortgage broker that we offer, we call it coaching to success. And so if we have somebody come to us who is not yet credit ready, if they work with our credit specialist, which it's a company that charges a fee, if they successfully complete the program and then come back to us and close a loan, we will refund them in full for all the fees that they paid for their credit services.
Yeah, that's pretty neat.
We want to get people in the game, right?
Absolutely.
It's just, there's so many benefits to homeownership. Not even counting all of the intangibles, not having to ask anybody for anything, not being asked to move, right? I mean, what if you have kids established in a school district and your landlord decides to sell the house?
Yeah. And I get that, clients will call me or friends of clients and say, we're renting and now all of a sudden they decided that they want to sell their property and now we have to move in 60 days. So in California, you have to give them 60-day notice.
Yeah.
It's not a long time to now uproot your family.
And there's a lack of rentals.
You have some dogs and cats, you have kids. Becomes a challenge, right?
I'm not a good candidate, unfortunately. But there's so many benefits to homeownership. But the way that I really look at it is I look at it as investing in your future. And one of the important things to remember is that when you're renting, you're just giving all that money away. When you're owning, a piece of every dollar that you're putting into your monthly expenses is not only going back to you in tax benefits, but it's going back into you by paying off your mortgage. And so 30 years from now, you will have a house that is completely paid off that has appreciated. California real estate just keeps going up and up.
I think that might be, we talked about, people feeling like they don't have the down payment, not feeling like they have good credit. I think something else that comes up in regards to what you were just talking about is, oh my God, I just lost my train of thought. No, I forget what I was going to say.
That's okay. She can cut out that little piece.
Oh, okay. Hold on, we're cutting that piece out.
So cut that piece out.
Hold on. You were just talking about because that was something else.
So you're putting your money into your investment. Every dollar goes towards your savings. You're paying off your house. In 30 years, you'll have a free and clear house.
Yeah. There was a third thing that people don't realize. Oh, I got it. Okay.
So start with
3, 2, 1. And that brings up another good point that I think people don't realize too, or another issue that comes up, not just with the credit or coming up with the down payment, but also investing. So if you're going to rent and you're going to purchase, sometimes they go dollar for dollar, right? And with not getting into too much detail, buying might be a little bit more than renting when you're looking at your monthly income.
Depending on the area.
Depending on the area, correct. But if you look at, as Danielle just brought up, the long-term effect of having the investment, getting the equity, the tax benefits, when you take all that into account, it might be a wash. It probably ends up being even better
100%.
to buy than rent when you take the long-term effects into account versus just, hey, this is going to cost me $500 more a month, so I better just rent versus buy.
If I were to use that same scenario for my own example, right, we probably would have found a rental for $4,500 a month, maybe $4,000, either way. If we had waited all this time, we would have nothing other than a house over our heads, right? We would just have a place to live. Instead, I have 3 homes in Northern California that all were created off of that initial investment that have now each nearly doubled in value. Well, not the most recent one hasn't doubled, but the other 2 have doubled in value in that short time. So I probably have $2 million worth of equity that, let's say something were to happen to me today. Right? My kids now all of a sudden have not only a guaranteed place to live, but we have equity. We have things that we can sell. We have assets. We have things that can be passed down.
Right. And I think, as you mentioned, you don't have to go into it thinking, I want to purchase my forever home.
Right.
You can go into it thinking, let's just get a house that works for us right now. Yeah. And then in 2 or 3 years, let's use that equity and go to another house that works for us.
100%.
And kind of in regards to what you did is your example.
Yeah. My first house was not my dream house. It just wasn't, right? But I'm so thankful for it because it was good enough, right? And certainly if we were renting, there would have been things that I didn't love about any house.
Right.
But it allowed us to step our way into our goals. And while we were doing that, we were building our business and, the rest of life kind of followed. And now we don't have to worry about those things. But It was a tool that allowed us to really leverage our long-term wealth.
Yeah, and I think that's what it's about, renting versus buying. I think when you're buying something, you're leveraging your wealth to create more wealth.
Yeah, 100%.
Mm-hmm. So and don't let, like we mentioned, don't let the fact that you don't have a down payment or you have bad credit or you feel like it's a little bit higher payment to buy versus rent. Talk to your mortgage broker, talk to your realtor, see what's out there. and really get a handle on it, because chances are you can purchase versus rent, and it makes sense.
And the thing is that in today's market, lenders no longer make loans for people who can't afford it, right? So you will not get approved for a loan unless on paper your expenses pencil out.
It's a great point.
And so, it's always better to know than to wonder. I mean, that's what I tell all of our first-time potential home buyers is go through the process of figuring out what you can and can't do. At least you'll know. Like, it doesn't cost anything to go through that process. I think there are a lot of lenders that are charging upfront fees for the pre-approval process these days. We're not one of them. But, going through that process, it's an education process. It's just like anything else. If you don't go through that education, you're not going to know, and you're just going to continue to waste money throwing money into rent.
Yep, and it's better to know than not know.
Yep. 100%.
So hopefully this was helpful today.
Yep.
And hopefully if, you're sitting there thinking and listening to us today and thinking you're in a rental, or maybe you're thinking about purchasing, that you'll take the necessary steps to, as you said, go talk to your mortgage broker, find out what it looks like to purchase.
Better to know than to wonder.
Yep.
All right. That's a wrap.
Another episode of the Real Estate Play-by-Play. Cheers.
Cheers.